India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to Bazaar Morning Call. We have plenty to celebrate. The bulls managing to conquer the 24,000 mark on the street. India managing to conquer Australia in Perth. And with me, I have slightly not so new, maybe not so new faces in the studio today. I'm Surabhi Upadhyay, Manglam Malu on my right and Rima Tendulkar on my left. Good morning, guys.
Hi, good morning. You know, as we celebrate what you spoke about, here's a grim reminder that today is 26/11. It's 16 years since the horrific attacks that shook Mumbai and the nation. A lot of people lost their lives. The city was, in shambles. So
we remember them. We will always remember them.
We
salute the brave hearts. And of course, we remember what the city endured.
We take that, on board, and also know that every time there is such a grim thing that happens, we all bounce back as a nation, as people as well. And that's what, will happen in the markets as well, bounce back. The important part that Surabhi said, yesterday we conquered the 24,000 mark on the Nifty. India went ahead and conquered the Waka. The question is, there is still some business left. For the Nifty, we're still way off all-time highs. And for the series as well, there are still 4 games to go. And three of them, we need to win to qualify for the World Test Championship. So steps in the right direction. Where this goes is what we need to track.
Well, typically what you do is after your first win, you take a bit of a pause, you take a bit of a breath, and maybe that's what our market will want to do today. So let's kickstart with the cues. The cues are not bad, but they're not overwhelmingly sort of positive as well. Let's start with Wall Street first up. And there we had, more of the same. Equity markets continue to rally, and once again, it was the Dow outpacing the Nasdaq on Wall Street. Again, the Nasdaq was up about 0.3%. The Dow put on another 1%, and that's what's been happening in the U.S. Domestic economy-facing stocks, domestic consumption stocks, they've been doing better, which is why the Dow is catching more of the investors' fancy than the tech-heavy Nasdaq of late. But what are we dealing with this morning? We are dealing with social media posts coming in from the U.S. President-elect Donald Trump. Now, he's speaking about tariffs already, and he's saying that the day he takes office, the inauguration day, 20th of January, he will impose additional 10% tariffs on all goods coming from China. And now he's talking about 25% tariffs on everything that's coming in from Mexico and from Canada. So a lot of this rhetoric / perhaps possible reality tariff talk will continue in the weeks ahead. The market knows that. So it's trying to take it in its stride. If you see the Asian market reaction, when the Chinese markets opened up, they were originally negative, but now they've turned positive. Though some of the other regional markets are still down. Japan, for instance, is still down. But Asia is kind of looking at a lot of this tariff talk and taking time to let it sink in. What's good, however, is the cool-off in the bond yields. That's been pretty dramatic. And this is because of Scott Bessent's announcement as Treasury Secretary. He is someone who is seen as, a bit of a rationalist, someone who believes in fiscal prudence. And that's why the bond market has been celebrating the fact that he will take charge at the Treasury. The yields have cooled off pretty dramatically in the last couple of, days. I mean, from Friday to where we are today, 4.3 on the US 10-year, so that's not bad. Even the dollar cooled off, finally took a bit of a breather after that mega move up to 108. But this morning, if you look at the dollar index, it's around 107.3. So it's not like there's a major fall in the dollar, because in general, dollar strength is something that even Bessent is in favor of. So let's see how this plays out. But for the time being, bit of a pause in the dollar as well. The good headlines from crude. Rima is going to talk about that because there's been a cool-off. There is hope that finally, after well over a year, there'll be a ceasefire between Israel and Hamas. So let's see. Just to talk about the positioning over here. Now, the Nifty has had a dramatic recovery, a fantastic recovery from the lows. 23,250 thereabouts. That's the lowest point we've hit in this correction. And over Friday and on Monday, there's a 1,000-point recovery that comes through, which is why I'm saying that maybe today could be a day of slight pause, maybe starting a little cautiously and optimistically. And let's see if the bulls can build on that, because the critical question for this market is the worst of the FBI selling onslaught over? We'll get to the numbers in just a bit. But remember, yesterday's action was also including the MSCI rebalancing. So that kind of plays in. We'll talk about this as we go forward, but the bulls will really hope that from here onwards, at least the FPIs can be a little, they can show some relief and respite, and the bulls can keep building on these steps. We've already conquered the 20 DMA. Let's see.
Indeed. So the FIs were buyers in the cash market after 38 sessions of selling. Yeah. Of course, aided by the MSCI rebalancing. Then you've got that crude price decline of 3%, Dow closing at a record high level. But the GIFT Nifty, I think, is on the flatter side. Once again, putting the Asian picture on board. So you've got China and Hang Seng in the green. So those markets are rebounding. And the general perception is that the new appointment to the U.S. Treasury Secretary could be seen as, positive for China because he promotes measured tariffs and he's open to negotiations with China. So which is why you've got Hang Seng in China up in the green, but the rest of the Asian markets, so Nikkei has got a cut of more than 1%. Taiwan, Korean markets too under pressure. But really, it's, the fact that Trump is following up on his election rhetoric about trade tariffs, that follow-up, that he's not going to, ease up on it. And I think that is the big breaking story about the, the additional tariffs. The first executive order coming in from Donald Trump on the 20th of January is going to be the 25% tariffs on on Mexico and Canada, which are US's one of the largest economic partners, and then plus additional 10% on China. This is largely because he wants to control the illicit drug, which is coming into US from all these nations. But that's the big breaking story that's coming through. We'll discuss that in greater detail. For Japan in particular, in other global news, the services PPI has risen in the month of October by 2.9%, ahead of street expectation. Crude prices are down 3% overnight and now below the $73 per barrel handle on Brent. Putting the flows picture on board, the DII's net sold 6,900 crore. The FIs bought nearly 9,950, but again skewed by the MSCI picture, and QIPs are continuing.
You made the point on controlling illicit drugs coming into the country. Illicit drugs rarely come tariff and tax paid, but then, let's see. This is going to be an interesting space to watch in the weeks ahead.
It will be, but this week itself, we have the Nifty November series expiry playing out as well. Over the last two trading sessions itself, we've seen nearly 900 points on the Nifty. So the question is, where do we go from here? So just looking at a bunch of triggers that led the market to move the way it did in yesterday's trading session itself. So yesterday's move on the Nifty was actually led by three major things. We had, the Maharashtra election verdict that came by. Then you had the MSCI inflows. And then you had the short covering that took place in F&O itself. So if you just take a look at the Maharashtra election verdict for the first half of trade, the high on the Nifty was made at around that 24,351 mark. Thereafter, we saw some bit of selling. But at the lower levels, those two other factors like the FII buying and FII short covering came by in picture. We've been talking about how the FIIs have been, the first time cash buyers in the last 38 sessions led by MSCI inflows. But remember, if you just take a look at the last time the FIIs bought in the cash market, X of any of this was way back in September 2024 itself, September 26th, 2024. So on a month, a date-to-date basis, is actually nearly 2 months since the first time the FIIs bought in our cash market. The second part that played out, yesterday's delivery-based buying that we saw in a lot of these index heavyweights. HDFC Bank hit a record high. Reliance did extremely well for the last couple of trading sessions. It's been doing well. ICICI Bank and Infosys as well. All of them saw some delivery-based action. Importantly, the FII short covering continues for the second trade session. So yesterday we have FIIs buying around 3,400 crores in the cash market, covering 24,000 shorts. And if you look at the FII positioning over the last few trading sessions, you would notice that the net exposure is coming down from what? Minus 2.18 lakh to minus 1 lakh. So in just the last 5 sessions, 1 lakh short contracts have been covered, and shorts, which was 75% of the system just about 2 days ago or 2 sessions ago, have now come down to 63% itself. More of that is something we'll be tracking. 24,300, that remains a bit of a fulcrum for the next couple of days, because 24,300 call and put are both equally active. Those who are writing both the call and the put are playing for a broad range on the Nifty for expiry between 24,000 and 24,600. And that's where a lot of the technical levels on the Nifty are placed as well. The 20-day moving average is strong support. On the way up, we have the 50 and the 100-day moving averages. We'll be watching out for a bunch of stocks which have come out of F&O ban, namely Adani Enterprises, Nalco. We have a couple of others as well. But two sectors I'll be watching out for in particular. One will be the mid-cap, because when the frontline indices consolidate at high levels, the mid-caps typically outperform. And second one will be the FMCG stocks. Why do I say that? Because now the success of populist measures is something that everyone's seeing electorally. that means that, there will be more money in the hands of people. Will they spend it on staples or not is something we'll track. And secondly, overnight, we did see oil prices come down as well. So all these factors doing well for the FMCG sector.
And the FMCG giant HUL will be in focus on the demerger news of the ice cream business. But